have Mr. Krishnan Vishwanathan, founder and executive director with Pay with Ring, talking about digital lending and the future of digital lending with us. Can you walk us through how does digital lending improve with credit accessibility?
Yeah. So Lavanya, I think what digital lending has enabled us to do, I would say fundamentally is do three things. Number one, it has reduced the operating cost of giving a loan. If you remember, if I go, a decade back or 2 decades back, getting a loan would mean multiple trips, a branch, tons of paperwork. Contrast that with today, when I talk about digital lending, from the safe confines of your home, someone can just download an application or go to a website, take a few minutes, and literally without any paperwork, get the loan. So, and if I just were to contrast some numbers, earlier the operating cost as a percentage of loans used to be a few percentage, right? Maybe 4 or 5%. Today it's a sub 1%. So one, the operating cost has gone fundamentally out of the equation. The second thing it has done is digital lending has, on the back of proliferation of huge amount of data, digital data. This is data related to, payments. This is data related to consumption. This is data related to income taxes. All of these data, and you're talking about, terabytes of data being available at your fingertips, has improved our understanding of the consumer, the borrower, and which has enabled us to underwrite better. That's the second aspect. I think the third important aspect from a credit accessibility standpoint is when you had a very rigid, paper driven, lack of technology kind of a structure, the products are very, very monolithic. So a product that would work for Krishnan will have to be force fitted on the same product for Lavanya. But today, digital lending allows me to, figure out what a consumer wants. And no longer am I running with 10 products in my menu. I can run with 1 million products in my menu without any complicated overhead. So in many ways, I'm able to cater to a segment in a more profitable manner with products that are far more relevant while ensuring that the risk is reduced because my underwriting has improved. So all of these things together, accessibility, which was credit, which was, penetrated, I would say top 5% of India, is easily penetrating more than 50% of India today.
See, we have the RBI coming up with different modes in which they make taking a loan easier. Okay, so in that basis, there was a recent circular where the RBI spoke about that all loan documents have to mention very clear idea of what are the charges which are being placed. So in that scenario, isn't digital lending a more preferred form of lending or borrowing because it brings in transparency in the whole loan process and is also an enable and brings in financial inclusion too? Am I right? Yeah. What are your thoughts on the same?
Oh, absolutely. Absolutely. Let me first address the point on financial inclusion and then I will address the point on transparency, right? Credit accessibility, when I said it has gone from 5% to 50%, we are really talking about the additional set of people who have access to this credit were the people who are fundamentally financially excluded, right? And and when I say financially excluded, we are talking about large segments of Indian population. As you know, India is an economy which is driven by small business owners and self-employed. Hitherto never ever got access to formal credit, right? Always dependent on money lenders. There's a significant part of otherwise salaried class, but who are irregular salaried, right? Drivers, etc. And that economy has only gone up in the gig worker era in the last decade. All of these people have faced one fundamental challenge. Number one, their income is very irregular. Therefore, underwriting them from a traditional standpoint is not easy, and therefore you need new data-based underwriting technology to be able to do that. Number two, when you had ticket sizes which were 3 lakhs, 5 lakhs, 10 lakhs, 20 lakhs, this segment, which is a mass market segment, they're making income from 30,000 to 50,000. Their ticket sizes may be 50,000 rupees. I mean, they needed a different kind of loan. So when I first talk about digital lending, financial inclusion has reached this level now. Now a shopkeeper can get a loan through our app. Now a Uber driver can get a loan through my app on the fingertip, right? And in a way that is convenient for him. He wants a loan which he wants to prepay? Does he want a loan which has a repayment structure which is better aligned with his cash flow, like a daily EMI, right? Which a shopkeeper may want. All of this I can do with minimal complexity overhead because my technology and digital lending is enabling me to do that. So financial inclusion is, I would say, fundamental. And let me give you a number, right? When we started our journey in 2016, 25 to 30% of our customers were new to credit, right? Today, that same proportion is sub 5%. So financial inclusion has genuinely reached large parts of India, but I would still say it's reached tier one and tier two. It's still not reached a semi-urban rural. There are challenges why it has not penetrated to that level. Now, coming to transparency, absolutely the most important aspect, right? Now, suppose some customer goes to a branch, he gets a very, very complicated physical form. He's not able to compare. He doesn't know what charges there are versus what we are getting into a world where, RBI has very clearly laid out these are the 10 most important sets of information, a common template, all digital lenders in an easy to understand fashion disclose to the customers. Suddenly, a customer, this become a very competitive field, which is good for the borrower, right? Now he can keep Ring next to all of our peer and literally compare what are the charges, what are the rates, what are the difference in feature sets in a way which is very easy to comprehend. So the transparency, and I would say more than transparency, the awareness of the customer into what he's getting into from a financial obligation point is becoming very clear, which is leading to lower risk and more than that lower customer service or escalation issues subsequently.
Transparency. There's also another angle to the whole part, which is the recent cybersecurity attacks that many individuals are going on. So in that cases, trust and security are more crucial for gaining and maintaining the user's confidence to when you go through an online app. What are your thoughts on the same, and how are you looking at tackling it?
Yeah. So Lavanya, I think there are two facets to this question. One facet to the question is, it's a very, very big obligation for organizations like ourselves. We are, it's a trust that we are having, right? And we have a lot of data. So it's an obligation for us to safeguard that. There is a second facet to it. How do we communicate that to the consumer and gain their trust, right? I mean, just because I have it doesn't mean that they will trust me. Let me address the first part. Uh, Number one, I would say the Indian policymakers are taking the right steps in terms of moving from a regime which I would say 10 years back there were zero safeguards to where we are, and doing it in a very methodical and incremental fashion that the data become more and more right. Of course, the geographical restriction, which is being in the confines of India itself, came back many years back. From that point to today, where we have the DPDP Act, which is hopefully going to get operationalized at some point this year, are all steps in the right direction, which creates a architecture where the data can be secure. But that is just a policy making tool, right? It is left to organizations like us. Are we putting it in our DNA as an organization that this data is for the safekeeping and only for the welfare of our consumer? And let me give you examples of there. I think it does get misused. I mean, all of the marketing calls, I'm sure you are bothered by it. I am bothered by it. It's just a manifestation of the fact that, a consumer may have shared his data with an intent for a specific purpose, like getting a loan, but the data is now getting misused for many, many other purposes, right? It is unfortunately left to the organization, and at least we believe that unless the organization is able to safeguard the data, in the long run, they will not be able to gain the trust of the consumer. Now, what we do on the other facet, which is how do we communicate to the consumer, we are very, very open. We have put monitoring facet. Let me give you a few examples of how important customer privacy is for us. We are probably the only fintech lender in India that do not expose the customer's personal mobile number to our collection executives, right? So it is very common that when an Uber driver has to call you, he has to call you from within the app. So the Uber driver doesn't have your number, right? Nobody does that in financial services. We have implemented that. Our collection executives can only call through the app. The traditional practice, which is still followed by all banks and many, many fintechs, is you share, these are the list of 100 consumers who we have to do collection calls. Here are the mobile numbers. Please go visit them and call them. We don't do that. Very, very small thing, but just goes to illustrate how important we take customer privacy. There's not a regulatory requirement. This is a requirement we put as a burden on ourselves. But cybersecurity, these data leakages, they're all very, very important. We have a very strong data security team. Our infosec is, of course, the minimum compliances everybody does, but we've gone over and above that with the right set of license tools that ensures that there is absolutely zero risk of any cybersecurity threat that happens for us. But I would say it's one of the gravest security threat for the nation as well as to companies like us.
Thank you. I especially like the fact that you're masking the telephone numbers and it's not been given to any of the people out on the field. That makes it, you feel secure about the whole concept then that way.
Absolutely, yeah.
See, next talking about partnerships. We have found that fintechs have now, there is a season of partnerships and collaborations which is going on. And they can expand the reach and integrate complementary services between, functional institutions. Do you think is the way for the future? What are your thoughts?
Yeah. So, one of the things that digital lending enables you to do is to integrate better. We are living in a, sorry to use technological jargon here a little bit, we are living in a world of APIs and microservices, right? Which allows our machines rather, to talk to each other, share information real time, and make the best decisions that are for the good of both the companies as well as for the consumer, right? And if I take that to the logical conclusion, genuinely, partnerships are the way forward. I am always a big believer in embedded finance. Embedded credit, the traditional way, is what Bajaj has been doing forever in the form of consumer durable finance. You go to a shop. What in the era of digital lending partnerships will do is take embedded credit to a very, very different level altogether, right? And it is because there are other organizations are owning the customers. The other organizations are privy to a certain set of data points that are relevant. Now, if we do it in a way which is from a governance standpoint and from a compliance standpoint, a win-win for the consumer, such partnerships, payments companies and credit companies, e-commerce companies and credit companies, these companies coming together, and even within financial institutions, right? One of the big ways fintech lenders are making a big difference are getting into co-lending partnerships with large banks. So the banks are able to take their cost of fund advantage and customer ownership, and fintechs are able to bring their prowess in terms of digital lending competencies, and ultimately making the two meet in a way that is most successful for the borrower. So absolutely, it's the next wave, I feel. Fintech lenders, ultimately, people like us are more enablers. We are not the balance sheet providers, and we will need the right set of partnerships to be successful.
Thank you. So we spoke about security, transparency. We spoke about partnerships, collaborations. So we go to the next, the last question for the day. What are your thoughts on where the future of digital lending is now? We have come a long way since, the last 10, 15 years as such. Your thoughts?
Yeah. So I would say there are two things. One, that it may sound incremental, but to the extent there is still some part of the journey on the data stack, the utility, the public utility, which can still be run, right? It may sound incremental, but can create a sea change in terms of availability and accessibility of credit. Let me give you an example. Income tax data, GST data, still it's coming out in bits and pieces, right? Particularly for the self-employed small business owners, such information, if readily available, like in the form of account aggregator for banks, will go a long way in enabling credit access, ease of credit for that segment of the population. It may sound incremental, but it actually covers a segment of India that for which this data is very relevant. I think the second area where I genuinely feel a big change will happen is in Gen AI and integration of Gen AI into digital lending. Today, in our company itself, we have taken two aspects of Gen AI and have started experimenting that into our customer service operations. And how are we doing that into customer service operations? The Gen AI is able to understand the customer better, give more informed and intuitive prompted response is able to, pop up the right set of information to the executive. So he's able to, the discussion with the customer. So we have integrated on the customer service aspect. So the experience becomes better. And of course, over time, the trust will improve. But there are aspects from the business standpoint where GenAI can play a role in getting the right cross-sell product to the customer, right? And that can increase value. So at least for me, the next real, fundamental shift that will happen is integration of GenAI into the operations of the our fintech lender. So this is the second phase where I'm at least very excited. The two projects that we are doing right now will go mainstream in this month. But hopefully we'll have a lot more to share on that in the months and years forward.
Thank you very much, Krishnan. That was completely enlightening on where the digital lending process is and where you're going forward. Thank you very much.